Hi there, Lenny LaRocca with the LaRocca Real Estate Group at Vista, Sotheby's International Realty. Today I'm going to talk about common tax deductions whether you're buying or selling real estate. Before I talk about that, I want to bring your attention to two links on my website. One is if you're buying real estate, hit the buying link, and number two, if you're selling real estate. Now back to my topic. So one of the requests I received the other day was to talk a little bit about the common tax deductions whether you're buying or selling real estate. First and foremost, I always want to direct you to your financial or tax planner. You should always consult your professional before considering these items. But there are common deductions that you can take whether you're selling a property or if you're buying a property. If you're selling a property, you have the opportunity to deduct all of your transaction costs. Those transaction costs will include your commissions, your title, your escrow, your hazards, and any other costs associated with the sale of your property. That also can be extended to any costs that you incurred to improve your property prior to putting it on the market. Also keep in mind you have the luxury of what we refer to as the capital gains tax as a seller. So capital gains tax basically is defined as if you live in your home 2 of the last 5 years, you have the ability as a single person to deduct $250,000 of capital gains. If you're married, you have the opportunity to deduct $500,000 of capital gains. Many of my clients use this capital gains deduction to their benefit, tax benefit and financial benefit every year whenever they're buying and selling real estate. Keep in mind though that if you buy a primary residence and you decide at some point in the future to go ahead and lease that property out, as long as you don't lease it over 5 years and at least again met the 2 out of the 5 year requirements, you can go ahead and get the capital gains deduction. If in fact you lease that property greater than 5 years, now your best opportunity is to defer the gain of the sale of that property by use of what we call a 1031 exchange. On the subject matter of 1031 exchange, which many of you have written to me and asked me to bring a professional in, I will be bringing a professional in a future video who will talk a little bit about that 1031 exchange. It's a great tax deferment tool. On the buying side of real estate, assuming you're a buyer, many of your transaction costs, like as a seller, are deductible in your tax return that year that you do purchase the home. Again, that will include your escrow, your title fees, and any other fees that are associated with the acquisition of that property. So keep that in mind. Also, as a buyer or as an owner of a property, remember that your biggest tax deduction every year will be your mortgage interest deduction, which means that from January through December every year, you get to deduct the total interest that you've paid on your home loan. And that becomes a very good tax deduction for most of us who are buying and selling real estate. So again, if you're considering buying, selling, or investing in real estate, my contact information is below. Please contact me at any time. And I look forward to our next video chat.